Good morning, everyone. I'm Gaurav Bisa from InCred Equities. Nifty had an interesting session yesterday. It closed in the high point of the day with 100 points gain. This was predominantly possible because of Bank Nifty, which was extremely strong yesterday and jumping 700, 800 points throughout the trading session. And since opening, it kept on gaining grounds, gaining territory, which ensured that the downside for Nifty was limited. And once Nifty managed to sustain on the positive zone, it kept on going higher. So Nifty was seen moving between the negative zone and the positive zone, although on a very minute basis for first half of trading session. The second half of trading session brought a lot of shares to the bulls, and all in all, it was a comfortable close. With this, Nifty has given a close comfortably above its 200-day exponential moving average. It's the first day. FIs have also been positive, 3,900 crores worth buying in cash. Domestic sold around 2,500 crores worth in cash. So we have second consecutive day where FIs have turned bullish or have they turned buyers. What I would like to tell you are two things. One, don't just go by 1 or 2 day number of FIs on the buying side. There should be 4 or 5 days, consecutive days where we see a buying number. Also, the buying number should also come on a day when the markets were weak. Yesterday, the markets were positive. Day before, the markets were extremely strong. On a day when Nifty closes 1% lower, and if you see a strong buying number coming from FIs, and if that happens for a couple of consecutive days, that will cement the position that FIs are now seriously looking at Indian markets, Indian equities. On a positive day, many people would like to buy. So that is one part. Second, if you look at the hourly charts in Nifty, we have seen multiple gaps that have been formed. Nifty made a low of 21,750, 800. On the same day, it closed around 21,100, 150. And then we had a strong gap up opening towards 22,500. Then we spent some days and we went towards 22, 700, 800. And then we had a 500 points, 450 points, 500 points gap up opening. So we have two gaps. Generally, people have this notion that gaps do tend to fill. Not all the gaps tend to fill. Some of the runaway gaps never get filled. But the point I'm trying to make is a strong momentum in a scenario where the majority of upside has been because of gaps. That is a sign of caution. So one should keep that on back of mind as well. Do not buy here. Any declines, any dip towards 23,100, which is the cloud support area, can be used as buying opportunity, keeping the stop loss at 22,950, playing for 23,800 levels. Risk takers can buy a Nifty on a dip towards 23,350 if it sustains, if it does not go below that, keeping stop loss of only 50 points and playing for 23,500 kind of levels. US markets actually closed 2% lower. Nasdaq was down 3%. Gift Nifty is not showing that big a cut. So let us see how that pans out. And once we see Nifty sustaining about 2350, which is the 200 DMA, we may see some short covering again coming back. So interesting day ahead. Let us see how it pans out. Uh, if you look at the sectors, FMCG continues to look good. Banking, especially, is the key to watch out for. 53,100 spot is the level to watch out for. A close above this would mean a breakout from a falling trend line on a daily charts, and Bank Nifty can then go towards 54,000, 54,500. So Bank Nifty is going to be the key whether Nifty goes towards 23,800 or not, and keep the focus on that. Trading also in terms of index, one can keep Bank Nifty on radar. Sustained move above 53,100 can be used for buying Bank Nifty as well. That bill from my side. Thank you.
Investments in securities market are a subject to market risk. Read all the related documents carefully before investing.